Hey, what's up everybody? This is Robert and you're watching Medicare 101 with Robert. What we're going to go over is not so much Medicare, but more so a supplemental policy, maybe to just major medical in general, whether it be Medicare or like an under 65 policy, like a just like a major medical policy. So we're going to go over what the benefit is to a insurance company sending you the check versus sending it to a doctor or a hospital. So we got some cool stuff. Stick around. Alright, hey, thanks for sticking around. Again, my name is Robert. And what we're going to go over is why is it beneficial for an insurance company to send you a check in a lump sum versus send it to a doctor or hospital. Well, here's how I'm going to explain it. Major medical insurance, whether it's something provided by your employer, you're obviously the employee if you've got an employer. If it's something provided by your employer, then that's major medical. If it's something that has like a deductible and a maximum amount of pocket, that's major medical. Medicare, Medicare Advantage plans, that's all major medical. So all those are geared to pay doctors and hospitals. That's the way that they are set up contractually. What I'm talking about is a policy that, let's say you had an accident, let's say you had a heart attack or a stroke, let's say you came down with cancer. I'm talking about a policy that would kick in and pay you a lump sum of money, either all at one time or for a period of time, and you take that money to the bank, not the doctors, not the hospitals. So it's very important to understand why that's relevant. The reason it's relevant is because when you think about something like cancer, think about getting diagnosed with cancer. And no, this isn't a fun topic. But think about getting diagnosed with cancer, or someone you love, or someone getting diagnosed with cancer, and they had to go 3 to 4 hours away 2 to 3 times a week in order to receive cancer treatments. Now, one beautiful thing is major medical will kick in and cover for the cancer treatments, or at least it should. What major medical is not going to kick in and cover is you going from point A to point B 2 to 3 times a week for chemo treatments. The gas is going to add up. You might have to stay the night a couple times. You're not just going to go there once, twice, or 3 times. It's going to be a repeating thing over months. You might have to get a hotel. If you're human like me, you got to eat. So those things major medical doesn't pay for. These supplemental companies will. They will kick in and they will pay the policy owner a check, and in regards to the contract that they have with the policyholder. So in other words, if someone has an accident, and let's say they have an accidental policy that covers them for $25,000 in the event of an accident, and they go to the hospital and the doctor says, well man, you can't work for I don't know, 6 months. Well, that policy is going to kick in and help pay. Okay, it's going to, 1, avoid a workers' comp claim. 2, it's going to kick in and help pay for the bills that come up via major medical copays and deductibles. And 3, it could even provide him a little bit of money to live off of while he's out for 6 months. And that's just kind of a number I threw out there, an example I threw out there. But I'm just trying to relay the message of why it's important that the company would send money to the policyholder and not the doctors, not the hospitals. So, hey, I hope you learned something today. If you didn't, I didn't do my job. But thank you for watching anyway. My name's Robert. I'm signing out.